We are seeing strong traction for generative AI programs, leveraging our Topaz capability. We have integrated our generative AI components into our service line portfolio, creating impact for our clients. We have 100,000 employees trained in generative AI areas. We have developed a range of use cases and benefit scenarios across different industries for our clients. Our margin improvement program continues to gain traction. Based on the performance in the first 3 quarters and outlook for Q4, we're tightening our revenue growth guidance for FY24 to 1.5% to 2% growth in constant currency. Our operating margin guidance for FY24 remains unchanged at 20% to 22%. As you probably know, Nilanjan is leaving Infosys at the end of this financial year. I want to thank Nilanjan for the excellent work he has done and for the strong position he's put Infosys in. In addition, I also want to thank Nilanjan for his partnership and his friendship over the past several years. We wish him all the best in the future. With that, let's open up for questions.
Thank you, Salil. We will now open the floor for questions. Joining Salil is Mr. Nilanjan Roy, Chief Financial Officer, Infosys. The first question is from Ritu Singh from CNBC TV 18.
Hi, Salil. Hi, Nilanjan. As always, we want to understand why, yet again now for the third time during the year, you've revised this guidance. What is the visibility you have now, for the remaining part of the year? Why the tightening? Sure, it's going to be higher than 1%, perhaps lower than 2.5% on the upper end. Secondly, what are you seeing when it comes to client budgets now? Are clients in the US open to spending more? What are the areas of weaknesses and strength, whether it's geographies or sectors? Again, the same question, the headcount continues to come down. Even in this quarter, it has, even though your attrition rate is lower at 12.9%. Your hiring plans for the year, if you could outline. And apart from the numbers, if you could clarify on the deal wins and that mega $1.5 billion deal, that MOU that you had signed with a global client in the AI transformation space that you seem to have lost out on. What was the reason for that? Are you continuing to see deal cancellations? And while you wish your colleague all the very best, and you always say that Infosys has produced talent for other companies, you're proud of that. But what is the impact on business? Because this is not a one-off event. We've seen multiple exits over the course of the last 18 months or so.
Okay, so let me start off. There's several questions in there. The first, I think, was on margin. So what we've done is really, as we get closer to the end of the financial year, we've tightened the margin, the revenue growth guidance. The margin guidance remains the same. So in effect, really, the higher end has come a little bit low and the lower end has gone up a little bit. So we see the outlook in essence quite similar, but the guidance is tightened. That's how we're seeing it, based on what we've seen in the first 3 quarters, where our growth has been 1.8% in constant currency terms over the previous year's 3 quarters. And that's really all we've done with the guidance. On the budgets, I think that was one of the questions on what we're seeing with the budgets. At this stage, we've not seen any different behavior from clients. Typically, as you know well, Q3 is a quarter with large furloughs and other end-of-year holidays, and that we've seen continue. We've not seen either an increase or either a decrease. So the same sort of a view. Digital programs are fewer. Cost and efficiency, automation is much more. And generative AI has a lot of interest and traction, even if it's small revenue numbers today. Then there was a question, I think, about the MOU. We have no additional comment. We'd shared the comment in the statement we'd made, I think, some time ago in the quarter. In terms of leadership, we are indeed fortunate to have a good team and a very strong set of leaders within the company And over the last several quarters, and even in the past, the people who have taken on many of the new positions are people who have been in the company, have developed their skills there. And we are delighted. Nilanjan spent 5 years in that role. He will obviously share his view. And we've had a fantastic outcome in those 5 years. And really, Nilanjan's contributed immensely to that. And all the best wishes as he looks ahead.
Thank you.
Sorry, on the headcount question as well, and for Nilanjan, your Project Maximus, just before you go, I'd like to, know from you, where do you see the end goal of that project? How do you evaluate your term here, and what's next for you, after March?
Yeah, so it's been a tremendous 5 years here. I think, what the company has transformed over the years has been truly remarkable, right, in terms of the client intimacy, what we see, hunger for large deals, the focus on people, the entire focus on the shareholder, the capital allocation. So truly, outside the numbers, which, you all ask about, has been this whole transformation happening inside, and, under Salil and the board's leadership, that's truly been wonderful. 5 years is a long time, 20 quarters, answering the question. So I think it's time to move, and I'll do something later on, and as the press release says. But more importantly for me, I may leave Infosys, but Infosys can't leave me. It just has a part of me inside.
Thanks, Ritu. The next question is from the Economic Times. Beena.
Hi, Salil. Thanks for the call. Firstly, in terms of your deal pipeline, could you give us a sense, how does the next 2 quarters look like? Because your deal pipeline, the order book has reduced, that we've seen. And in the previous quarter, it was 7.7 billion, but the TCV has sort of reduced. Could you give us a reason for that? And on the senior level management churn that we've seen, just adding to what Ritu said, what is the reason that you've not really, absorbed newer or recruited newer or made newer appointments? And what is the reason that you're seeing a lot of these churn that's happening? Do you see this as, a one-off event, and what are the reasons? And another thing is on the reports they're doing around about Infosys sending a communication to a rival about anti-poaching and, unethical practices. Could you give us your view on that?
Okay, thanks. Let me try and go through the questions. I think first, on the wins, in fact, this quarter has been, I think, very strong at 3.2 billion. If you look at the 9 months, it's the highest ever value of deal wins that we've had. Actually, it's more than what we had in the year before, where we had a very large deal in that instance. So we feel extremely good. 70% of this is net new, 71%. That again is extremely strong because it helps to position us for more into the future. The deal win from last quarter was also exceptional, but those are big numbers. I mean, 3 billion is really well above our average deal win in any quarter if you look back, let's say 8, 10, 12 quarters and so on. So we feel extremely strong with that, what we see going ahead. And these have deals which are related to cost, efficiency, automation, consolidation, new work on SAP, cloud. So a lot of different areas, which is good. It's across the portfolio. I think you had a question on our senior leadership team. Again, my sense is, we have an exceptionally strong team at different levels within the company. We've continued over the last several years, and even well into the past, always promote a lot of people internally with larger responsibilities. We will do that this year and in the years ahead. And the type of work that we do, people have exposure to some incredible opportunities, both with clients, with delivery, with projects, and the type of projects we're working on are quite leading. So we feel good about that. In terms of some of the media reports you alluded to, we have no real comment on that.
Thank you, Beena. The next question is from Ayushman Barua from Business Standard.
Hi. So I think the trend seems to continue that despite the large and mega deals, revenue growth has not been on par, with the deals. So when can we expect the revenue growth and the large deals to be in sync? That is one. And secondly, any specific pockets of weakness you would like to highlight, both in terms of verticals or geographies?
So there, I'll start off and Nilanjan may add some things. I think large deals, more represent what is the level of connect we have with our clients for large transformation programs or consolidations or cost and efficiency programs. The revenue reflects both what deals contribute and then what programs clients are doing or not doing. For example, digital programs have been reduced in what we've seen over the last few quarters with clients. That really combination gives us the outcome for the revenue, and we'll see how the global economic environment evolves, and that will tell us when that comes in. Sorry, what was the second one? Oh yeah, the segments. So there we are seeing, financial services, high tech, telco, where we still see impact in the market. We see growth in manufacturing, energy, utilities, life sciences. So we do see both of those things. In geography, similarly, we see impact in our North American business, but growth in the European business. So it's not sort of one thing for all.
Thank you. The next question is from Money Control, Rishabh Shaw.
Hi, gentlemen. Rishabh here. So on your headcount, year on year, we have seen a lot of headcount. So does that indicate a weaker than expected revenue trajectory from here onwards? Your number of clients has been down month on month and year on year. So I would like to say something on that. And on furloughs, how much has that impacted revenues this quarter? And, discretionary spending, when do you see it coming back?
Yeah, so I'll take a couple of them. So I think furlough is a seasonal industry impact, and it's reflected in the -1% constant currency decline. So it's part of that as well. In terms of headcount, we had already told you all last quarter that we have a lot of utilization headroom still. In a way that was led to the 6,000 odd headcount reduction. We are still at 83.7, and our comfort range is between 84, 85. So we still have some capacity, and we can always crank this up by taking more trainees, on short notice as well. So our model is very flexed in terms of ability to recruit fast, train them fast, and put them on production. So that in that sense, I think we are in a good space in terms of ability to capture any future growth.
Great. Thank you.
Thank you. The next question is from the Mint newspaper, Jas Pardia.
Hey gents, just a couple questions. At the start of the year, you had expected to grow at 7%, and now this is the third such revision. How much of this revision do you attribute to company-specific factors, and how much of it do you attribute to macroeconomic issues? The second question, did the cybersecurity incident at McCamish lead to the termination of the 1.5 billion MOU? Could you give more details on this, and also could you cite some measures that Infosys is taking to address this?
So let me start off with the guidance point first. I think on the guidance, this quarter really we see this more as a tightening of the guidance. So in that sense, it's not so much a change. It's more that as we get closer to the end of the financial year, the visibility gives us to a similar outcome. So if you look at last quarter and this quarter, it looks in that sense similar, except the distance to the end of the year is reduced by half. On the deal specifically, the MOU, we have no additional comment, and we had made a specific disclosure at the earlier time. On the McCamish question that you asked, I just wanted to maybe share with you a comment from what we had stated in our financial results. As we've shared earlier, one of our subsidiaries, Infosys McCamish, experienced a cybersecurity incident that resulted in the disruption of some of its services. The systems have been largely restored and are now up and running.
Thank you. The next question is from NDTV Profit, Tushar Singh.
Hi. A couple of questions. First, on the deal making, we see that the large deal wins are still happening, but they're still not meaningfully converting revenue. So when do you think that is going to come back? And are the large deals ramping up as per expectations so far? Also, your margins have declined quarter on quarter, I think because of the wage hikes that went out. But you have maintained your operational profitability guidance for the full year. So what are the margin levers left in play so that's giving you the confidence to maintain those margins? Final question on your, I think the acquisition that you have done of InSemi-Tech. Can you just talk to us about it?
On the first one, I think, the way we see large deals really helping us to build a foundation into the future. And the win sizes, the overall win value is very strong at 3.2 billion. At 71%, very good to have the net new. That gives us, let's say, one piece of the revenue into the future. And equally, there are digital programs or other programs which are not something that clients are looking at in this environment. And that takes away a little bit from the revenue. So that combined gives us the revenue outcome as we see it, and as we as the outlook as we see it. So that's how we will put that together. On the margin,
yeah. So on the margin, as you've seen in our disclosure, one is we of course given our wage hike from 1st of November. That's about 70 basis points of the drop. In fact, we've dropped 70. We've had another impact of 30 million between revenue and cost because of the McCamish incident as well. So that's actually a 1.3% headwind. We've compensated that at about 50 basis points of the Project Maximus, which now is in full flow. This is across, we've talked about 5 tracks and many verticals. And there's about 10 basis points, which is from currency. And then, of course, there's a balancing around furloughs, et cetera, et cetera. So we actually are seeing a very strong underlying margin movement coming because of Maximus. And, of course, the wage hikes, et cetera, were planned and known for and are leading to this margin gap for this quarter.
The acquisition of
Yeah, so as you know, we have a very large and growing engineering business. We don't probably talk about it as much. It's a business which working with leading engineering companies around the world. And as you know, Semicon is this is a very exciting business in terms of semiconductor chip design, working with leading fab, non-fab players across the world. And I think it will give us, firstly, a good entry into a new space and also a new set of clients which we don't have. So we are very excited about this.
Thank you. The next question is from Haripriya Suresh from Reuters News.
Good evening, gentlemen. First, I wanted to understand, now that client budgets have firmed up, at least for the calendar year, do you see what does the deal momentum look like? Are there any signs of improvement at all? Do we expect things to look like they have so far? And on the guidance, I wanted to understand, because it was 2.5% at the upper end, right? Like, I wanted to understand, if you're not seeing cancellations, etc., why it was narrowed at the upper end. In terms of geographies, I mean, across, this is not obviously an phenomenon, but across the companies, North America has obviously been impacted. How much is that affecting you, and is Europe sort of helping in any way? And in terms of hiring, you said that, it'd be in time. So is it fair to presume you will not be going to campuses this year, and we can sort of expect headcount to trend the way it has right now? Thank you.
So maybe sort of combining a few things. On what we're seeing for the budgets as the calendar year starts, most of our comments are really on the financial year that we are looking at. The budget process has started and launched for many of our clients. It's still early in January, so it'll sort of work its way through. At this stage, we don't see any change from what we were seeing last quarter, in that we don't see things becoming worse. We don't see any sort of change in that dynamic. We will have our own view of the next financial year as we come into the March-April timeframe, when we'll have the April results. The guidance, again, for us, it's been more of, we are seeing similar outlook to what we were seeing in the past quarter, but as we get closer to the end of the year, just the variability reduces, and that's how we've narrowed the guidance. So it's not a question of reducing the upper end, because in that sense we've increased the lower end. So it's I would say it's really quite balanced between what we were seeing last quarter and this quarter.
The campus side.
Yes. So like I just mentioned earlier, we continues to monitor the utilization and our flexi hiring model. In fact, with COVID, which is both off campus and on campus, I think that's really been a new learning for us. So it's really on demand. We can go behind that thing. Any fresh demand comes in, and at this stage, of course, we're not seeing any immediate campus requirement. But for any volume increase, we have a very strong off-campus program as well now.
Thank you. The next question is from Haripriya Sureban from the Hindu Business Line.
Hi guys. Salil, could you give us some more color on the visibility in the market? We keep listening that the macro condition and the situation is bottoming out. Do you think so? And do you see any sort of green shoots, or what is your reading like? Which verticals do you expect to bounce back earlier? And on the margin front, do you see any impact if there is no tailwind from the currency depreciation, given that rupee has been flat for almost 1 year now?
So on the sort of outlook in the macro, we don't have a view on where it is in terms of the cycle. What we really are focused on is how that's impacted our client decision making. And there we see, what we were sharing earlier, financial services, telco, high tech, we still see the impact. Equally, we see growth in manufacturing, energy utilities, life sciences. There's a difference in the geographies as well, as we shared earlier, between North America and Europe. So at this stage, there's no more view that we have than that. We are obviously very positive with the deal wins we've got. A lot of those deals win in cost and efficiency, but there are also deal wins which we've seen, for example, in cloud, in SAP, and these are areas which we have tremendous strength in, and so we feel good. And then generative AI is becoming more and more important in all discussions. While it's not a big revenue component, it's still becoming more and more important in all discussions.
Yeah, on the currency side, we don't plan for actually any currency movement when we do our margin plans as well. So whatever comes on top from a currency benefit is actually always a bonus. So, but our underlying plans don't reflect that.
Thank you. The next question is from the Financial Express, Samir Bakshi.
Hello, sir. Please correct me if I'm wrong. You said a lot of GenAI projects are in pipeline, right? And you have around 1 lakh GenAI trained employees. So why is this that we are seeing smaller and active clients, their number have fallen? Smaller and active clients, the number has fallen.
I think if you see from a revenue perspective, which is more relevant, it's the large clients who continue to grow well. Of course, there is a longer tail, towards the 1,500 plus clients, but I mean, the biggest revenue chunk comes from the top 50, top 100, top 200.
Okay, thank you.
Thank you. The next question is from Rukmini Rao from Fortune India.
Hi, thank you. I have 2 clarifications and a question. One, the 30 million impact of McCamish, it has been accounted for completely this quarter?
Yes, between loss of revenue and in cost, yes.
Sure, thanks. And the other one, this is in continuation to what Beena asked. So Salil, does it mean that, I don't fathom how 2 companies can informally talk to each other? And if at all Infosys has actually sort of written to a peer raising certain concerns, it must be legal in nature. I mean, I'm guessing so. So could you actually tell us whether you have, had any sort of communication with your other peers when it comes to talent?
On any of the, I think you're referring to the media reports.
That's right, that's right.
So we have no additional comments on that.
But Salil, and going back to the deal that didn't fructify, right? Just want to understand from you whether, was it a client concern about Infosys' ability to be able to execute this deal, or was it a client-specific problem that you faced, or the way large deals are getting structured, or the checkboxes at the very last minute that are getting counted? What really led to this deal not fructifying? And also some sense on the large deals. Is there any fundamental change that is happening, how vendors are being looked at by clients when it comes to closing large deals? Thanks.
So on the way large deals are working, in fact, in this quarter, in Q3, we've seen quite a few deals which are consolidation deals where we've been the beneficiary, where clients are looking to consolidate to select partners or strategic partners. So that's one of the things that we are visibly seeing. On the specific MOU, which was not completed, there is no additional comment. We made the comment as we made the statement as we had shared earlier. The deal flow really in the market is good, because the way we look at it, at 3.2 billion, it's well above the average that we see for large deals in any quarter. With 70% net new, that's also very strong, because that gives us a good confidence that that is building out for the future. I think that then you get coupled with, there are digital programs which are not happening or slowing down, and that takes away a little bit from the possible benefits of these large deals. And that's really the balance that we're working on.